We are, as you can see my screen there, we're talking about Life Insurance Awareness Month. So we are glad to have you join us today for our webinar as we are in the middle of this uh, Life Insurance Awareness Month for September. And, we just recently on our Tuesday night webinar had a lot of stories that we shared just, over the years in this business, some incredible stories of families that we've helped with life insurance. And they're never good stories because there's always some type of loss, of course. But when you look at what we do for families and putting protection in place and helping those families in times of need, it's one of the most important things we can really do for families. So, this slide, we first, begin by talking about Life Insurance Awareness Month is really now, even though it's in September, every day and in our practice as we're planning and helping families and supporting them and doing all the different things that we do to help them with their financial foundation. We want to make sure that we're always instilling in them the education of a proper protection. So we're going to talk about that a little bit today. And we are also going to have one of our trainers from Nationwide talk a little bit about their products and how we help families in with the different types of products that Nationwide Financial offers as well. All right, so I think everybody can see that. I'm going to move on here to my next slide. Unmute there. Okay. All right, and let me see. There we go. I gotta get my cursor back here. All right, if you can see that, just some of the statistics about life insurance across America and some of the things that the insurers have done, claims that are paid. And, we see statistics like this all the time. If you go out and you do research on life insurance, and I know that we're really always looking into different types of studies and learning about Life Insurance Awareness Month and life insurance awareness in general, I should say, and all the different statistics that go along with it. So there's a lot of statistics out there. LIMRA does a lot of studies, and when we look at it, we're focusing in this month on it. But they do a lot of things when it comes to how much they pay in claims and how many assets and things like that. There's just a lot of information out there that you can read up on when it comes to life insurance. So, we're going to go over some of the statistics. And of course, in our brochures that we help families with and we show, and we'll be talking about today as well with Nationwide, there's a lot of these statistics that we want to really bring to the forefront with our clients. So, with that, I'm going to make sure you guys can see here. And I think, all right. So I see we got a few others that joined us here. And all right, and if you do have any questions throughout today's webinar, we're going to leave some time at the end here for some Q&A as well, that you can either raise your hand or send me a text, but you can raise your hand and do it. There's a Q&A on the webinar here as well. So, all right, I'm going to share my screen here as well again, and I'm going to jump into one of our classes that we show when it comes to life insurance and just financial education for our families. And it's our How Money Works. We're all familiar with the How Money Works book. I think, we're using the Evolve Financial here, Zoom. So you can see the How Money Works is up there as well as one of the logos. And I'm going to share my website here. You can see that now. So when you see, this is, a lot of us have the How Money Works websites, and you can go on there. My website is howmoneyworks.com/MC. Many others have their website. If you want to, I mentioned that if you want to go look and see any other slides specifically, you can go in there and kind of go back and review anything that we went over here. But let me decrease this. All right. So when you look at the seven money milestones, when we talk about it, the first thing that we want to focus on is proper protection. Obviously, we say proper protection is the base and the foundation of any financial plan that's out there. It's very important. And we really start with that. Now, one of the things I will mention when we meet with our families, and again, I'm really speaking to a big different types of crowds here, I guess. We have some newer people on with us. We have some veterans with us. Maybe you're looking at this even as, just some education. Again, this is all for training purposes only. And, that's something that we would want to share. So when I mention some of these examples and things that we're sharing, it's for training purposes only. But when you look at proper protection and when we really educate families out there, so whether you're being educated yourself as we're educating others, we look at the 7 money milestones, and these are all important steps when it comes to financial education being obviously number one. And we look at proper protection as being the basis of any financial plan. One of the things that we want to really focus in on is, do you have enough protection? And what's really important to you? Because, let's be honest, when we start off in financial education, proper protection is not always the most, for lack of better words, a sexy thing or thing that maybe is always on the top of people's minds when they want to think about their financial education or financial future. They're maybe not thinking about proper protection. Maybe they're thinking about emergency fund. Maybe they're thinking about getting out of debt. Maybe it's cash flow. Maybe it's building wealth, in different investments, taxes, different things like that. But we really want to first ask, and again, when I ask this, pretend I'm talking to a new client or prospective client here, really want to ask them, what's important to you? What's important to them? How can I help you? Because there's different things going on in people's minds. There's different things that they're really focused on and really worried about. Might not always be proper protection at first. So that's one of the things we want to ask them. But as we focus in on proper protection, one of the things that we want to look at, as I go to the next one here, we talk about learning strategies that to take control of your financial future. Zero market risk, what long-term care, tax-deferred growth, tax-free income, tax-free legacy. When you look at all of these different things combined, and you see in the picture there, they say, what a list of benefits. How many strategies would it take to get? How many strategies would it take to get them all? Well, again, what's important to them? But when you look at all these different topics here, we can offer zero market risk, long-term care, tax-deferred growth, tax-free income, tax-free legacy. That's really important. We look at the proper protection. It's not just about life insurance. It's not just about what if you die, what if you live too long? One of the things that we talked about the other day, and that I always share with any of my clients as we talk is, you have to look at what if you die too soon, you can live too long. What if you're uninsurable? And what about cost? These are different things that all come up when it comes to life insurance. So we're going to touch on all of these things, but what about also tax-free legacy? Life insurance, again, if you live too long, you may need some long-term care, but what about leaving a legacy? One of the stories we shared is how we really passed on one of my clients that passed in their 90s, did all the right things. We secured their assets, got them in a better tax situation, but their death benefit not only protected their assets throughout the years, but it also protected their family, and it was given to their great grandchildren to fund college, different college funds for them. So we offer a lot of different strategies for estate planning too, and legacy planning, and that's important to look at. So as we go to the next one here, let's see here, what do we do? Go back to this slide here. Okay. 3 ways you can be taxed. Let's talk about taxes too when it comes to life insurance, because I think that's a big thing that a lot of people miss as well. When you look at some of the things that life insurance can do is paying tax on the seed or the harvest. Now in this presentation, it's talking about an investment. Somebody saved $10,000 at 29 to a 9% annual return. They would have $250,000 when they reach 65. Would you rather pay taxes on the seed or the harvest? But one of the things that we look at for life insurance is taxes as well and how those are treated. And if you do it right, you can get some good tax advantages with life insurance, not only on the death benefit, but also on the accumulation. So I'm going to flip over here to the next class that we have here. There's 2 master classes on the website. And let me just close out of that. All right. So let's talk about proper protection. Let me share my screen here again. Love technology. Bear with me. All right. There we go. So hopefully everybody can see my screen there. I think we can. Let's talk about proper protection. Protecting against loss of income and protecting against loss of savings. So again, we look at the basis of any financial plan and focusing in on the proper protection side of it, life insurance. What do we have to look at? Well, you know, we say the protection of a man's person is more sacred than the protection of property. Thomas Paine said that. When you look at, ironically, protection of your financial asset is called life insurance, leveraging the insurance companies to help protect your assets and your family, right, as a defensive strategy. So let me minimize this here. And it's interesting. I love this slide too, because it says, it's a defensive strategy motivated by a sense of love, responsibility, or both, right? And again, what are people's perception of life insurance too? What has been their experience when it comes to life insurance? I think that's a big thing that we have to really ask ourselves and ask our clients. And it's interesting with this slide, when you look at, we talk about 10 times your family income. It's a good rule of thumb. If you earn $50,000 a year, you should have $500,000 of coverage. If you're in $100,000 a year, you should have $1 million of coverage. But what's interesting about the life insurance is it's obviously it's up to the person, but whenever we go over this, I just pause there for a little bit and I let this sink into the client and our prospect and our families that we're helping, because we want them to know, really think about that and really do a self-assessment and find out what's really important. You know, one of our great mentors, Swan Wynn, he wrote in his book, and it always, you know, it really hit home with me. I remember hearing this live from him in one of our trainings. But, you know, he talked about what a man or woman that saves $50 a month or $500 a month, or in protection has 50,000 of life insurance protection or 500,000 of life insurance protection. You know, which one really, how do they view themselves? How do they view their family? How do they view their future? Is one less important than the other? Of course not. Is one's family more important? No. But how do they view that? So it's really up to that person, because we've had many situations where the family, no matter how much you educate them or how much the need is, they're really adamant about a certain protection need. And it might be more, it might be less. And it's interesting, typically the more assets somebody has, the more they realize the importance of life insurance to leverage their assets, or maybe the more financially educated they are. But that's why it's our job to make sure we're really educating families when it comes to this and giving them the statistics, giving them the facts so they can make educated decisions and really understand, wow, maybe I am undercovered. Or maybe they have too much. We don't want someone to have too much protection. We don't want to have somebody have too little of protection either. So that's why we really have to do the assessment. But at the end of the day, it comes down to them. And unfortunately, they say the time when people want the most life insurance, they can't get it. It's already too late. Maybe they're uninsurable. Maybe something happened in their medical history. So that's why it's really important to plan ahead. Advance the slide. Well, it's not advancing on this. There we go. Okay. All right. It jumped on me. Okay. So there it is. All right. So how much life insurance do you need? These are different factors that we look at when it comes to really understanding what their assessment is of, is it when you look at their dime, their debt, income, mortgage, education, do they want to fund college? How much do they have in debt? Their mortgage. What would they want to protect? How do they need to replace income? Those types of things. So this is a good discovery with the client to find out, what factors are needed, or what factors are at stake, and what numbers need to be plugged in, what's needed for the family, and really assessing that situation. And I think, this is important too when we look at, what's the expense, and we are underestimating or overestimating the cost, right? 59% of Americans have life insurance. About half of those are underinsured. And a big thing that families look at too when it comes to that is, the cost when it comes to the cost of the life insurance as well. We'll touch on that here. But before we get into temporary and permanent, let me go back to this here for a second. Okay, so we talked about doing the assessment here. And again, I think it's important to discuss when you're asking these questions with a financial professional, and, when you're discussing with them, or whoever it might be for yourself, or you're doing this with a client or a prospect, is what is their perception of life insurance? What has been their experience with life insurance? Has it been good? Has it been bad? What do they really need to understand about it? And what are their blind spots when it comes to life insurance? Maybe they just didn't understand how it worked completely, or didn't know the advantages, or they thought it cost too much. One of the things that I shared on Tuesday is, unfortunately, we had a family that passed too early, younger woman that was a mom. And, she had a term policy. She was paying about $13 a month. And that policy paid out over $250,000, unfortunately, when she passed. And, it doesn't matter really when it comes to cost. There's no reason why somebody can't have some type of protection, because there's so many different solutions that are out there for families to really pick from. All right. This keeps jumping on me. All right, so let's go to temporary and permanent. And when we look at these different types of insurance, there's different categories, right? There are temporary and there's permanent. And a lot of people don't know the difference when it comes to this. Again, it's our job to educate them. We have solutions for both. And when you look at, I love these slides because it really paints a nice picture here of temporary or term life insurance, specifically usually a 10-year or 20 or 30-year period. And so it's for a term, right? You have a start of the period. You can see in there in the picture where that person's life progresses, and then you have an end of the term. So it starts and it ends, and it expires eventually. And some do convert with a guarantee insurability privilege depending on the end of the term and depending on the type of policy. Not all of them have that, but that's an important thing to have. So again, there's no reason why somebody can't have some type of protection. Cost should not be an issue. And, these are all different things that term policy can help pay for when it comes to insurance. And then, you no longer need life insurance, right? Children are grown independent, their education, home are paid off. Your financial responsibilities may have decreased to a point that you don't need a term policy, and you can let your policy end. That's great too. And that's why we use a lot of term insurance to supplement that, if you want to call it like a gap, or, the bridge that number that they may need in protection with, the term insurance that is a little bit more lower cost, right? What about if you still need life insurance? You still need term life insurance. After your first term, you may still have a mortgage, be a single income couple, have grown children, grandchildren home, run a business that continues to rely on you. So these are different factors to consider. What if you don't qualify? If you do qualify, it could be more expensive, right? It may not be an option to convert it either. So these are important things to discuss and understand about term insurance. And I love this because, like I was saying before, what's your responsibility, the financial X-wave? Some people, again, look at themselves as what is their responsibility when it comes to their family? Do they really understand what the assessment of that is? How do we factor that in? Again, going through their dime, having that conversation, just really understanding what life insurance is. Typically, when they're younger, they have less wealth. As they get older, they have more wealth, but less responsibility, hopefully. A lot of times that we see people are still on the right side, or to get to the right side, but they still have a lot of responsibility, maybe some debts, maybe children, grandchildren, whatever it is that they're working on or taking care of. There are still responsibilities. So this is the perfect picture, right? When it comes to decreasing responsibility, increasing wealth, but we don't always see that. And that's an important thing to look at. So when we look at permanent life insurance, some of the things that we want to focus on is, as you can see now, we have different things like long-term care, tax-free death benefits, right? Life insurance is tax-free even on the term side of the death benefit, right? But when you look at different living benefits now, right? And I love, again, this picture because it tells you all the different strategies that are situations that somebody goes through life, and different strategies that you could have to, or solutions to with them, like long-term care protection, tax-free death benefit, right? Supplemental tax-free retirement income. All right. 3 important benefits: life insurance coverage for life, long-term care, cash value, premium flexibility. I think that's important when you look at when you're looking at these permanent policies as well. A lot of people don't realize all the additional benefits that are out there for them. So that's why it's our responsibility to help educate them on that as well. You know, again, going back to the zero market risk, long-term care, tax-free growth, tax-free income, tax-free legacy. You know, I always use an example. I say, you know, would you rather pay more tax to the government, which again, not to get into that, pay our fair share of tax, that's important, but why do you have to partner with Uncle Sam more than you have to, right? If you could give them less, I'd rather give, or I should say, instead of giving to the taxes, I'd rather give extra money to the insurance company that I know if you die too soon, they're going to take care of your family. If you live too long, they can take care of your family as well and have these additional benefits and leave a legacy. You know, one of the things we helped the family that did $1 million survivorship policy where it was for both parents. And we've done a lot of these even in our own family and for a lot of clients. And they're a great legacy planning strategy if you really understand leveraging the insurance company and leveraging your dollars for tax advantages. And what we did is for this one family is we insured their parents for $1 million, and the children actually are paying this the premium, and what they're doing is doing it for an estate plan, for legacy planning. And they really don't need the income, or they don't need the money, but the family, the parents wanted to leave something to the children and made sure that they could use their nest egg for their retirement, which they're enjoying, but they wanted to pass along an estate and not have to worry about, you know, state taxes and certain things that they'd have to cover, but they wanted to make sure that they had enough that they could leave extra benefits, a tax-free income, and a tax-free death benefit when both the parents pass away, when husband and wife pass away to the family. And for pennies on the dollar, they're able to take that policy out and really have that strategy and that solution in place. So there's unbelievable things you can do to protect, not only for a breadwinner now, but for families down the road too, and different estate planning strategies and different tax planning as well. Again, I'm not here to give tax advice, nor am I, you know, I'm not a tax CPA or giving tax advice, but, you know, look into the details of the policies and understand how that works. And there's some great benefits if you do it right within these policies. And you can look at a retirement age, all the different things that some of these benefits can take care of, right? Tax-free growth, creditor-free, zero market risk, tax-free income. But one of the things we have to look at as well that has really been such a big thing at the forefront right now is long-term care insurance, right? They say 70% of people age 65 and older will need some type of long-term care services. And, you know, it's not always, something I always mention is it's not always just sending somebody to a home. A lot of people don't want to go to a nursing home. Benefits for themselves that maybe someone to come to their home, or to pay for different things that they need around the home, or having someone cut their lawn, whatever it is, that their long-term care, if they puts them in a situation where they have, two of those six of the activities of daily living that they can no longer do, they have different benefits that can pay out from the insurance company, based on the type of policy, based on what their needs are, and based on obviously their situation. So there are these are things that people are thinking about now. So even if they have done all the right things for their assets and even their own life insurance, what about long-term care? So that's a big thing that we're talking about. Recently we brought on a CPA, and as we've been now working with this person and getting her going through her files of her clients, or her family had a tax planning business and insurance business for many years, over 30 years with her father. And now what we're doing is we're looking through, and she's noticing all these statements coming through of old life insurance policies, and a lot of them are not sufficient. They're not really meant to do what they're supposed to do anymore. They're either expiring, or they're not being paid, or they don't have long-term care. And there's all these different things that we can look at. And the reason I mention that is just brings to the front, I mean, you look at all the different policies that are out there. There's so many families that are just either underprotected, or the protection they have maybe is not gonna last, or maybe there's a shortfall. Maybe it does not have like a long-term care or living benefit. And if their health is still in good, their medical history, and they still have good health, there's a lot of opportunities there to help them get in a better situation, which I'm going to cover quickly too, as far as one of the case studies that we recently did for a family. And that's where, you look at long-term care insurance and some of the statistics, and I'll leave Nationwide. I'm sure they'll handle some of these as well, but there's different policies that are out there as well. What I love about, a lot of the policies that we do with a rider on the permanent policies is that they don't expire, right? If the policy is paid properly, and no matter what the benefit's going to be used, whether, they're going to use the cash from the policy, or they're going to use the long-term care from the policy, or they're going to use the death benefit from the policy. Whereas some of the standalone long-term care policies that people have had, if they don't use them, which is a good thing if they don't need long-term care, but it could expire, right? They just, that money's lost. It's like your auto insurance, right? You don't want to use it, but if you need it, it's there. Same thing with long-term care, but a lot of these policies now have the riders where it will protect them and still give them a benefit, whether hopefully they don't need the long-term care. Well, then they were protected and they can use the policy for other benefits. And, when you look at, just to touch on the other living benefit riders, we don't have time to get into this, but there are other products and policies that have, living benefits when it comes to critical illness, chronic illness. And again, whether it's long-term care or these other living benefit riders on policies, you can give clients a better option when it comes to not just the policy if they die. Again, that's a lot of people think of insurance as death insurance, right? They used to call it just if they die. What about these other options that are out there? And it's important as these things come up for families nowadays, and you can add them to these policies, which is very important. So, one of the things that I do want to mention with this, as I mentioned, I'll show this case study real quick here, is, there's different types of policies you can put in place. And again, affordability should not be a reason not to get the policy, because you can leverage different types of solutions and really put something in place that'll give a full protection need. First and foremost, we want to protect the family. But secondly, of course, we got to make sure it's cost effective, right? It's going to be able to be affordable by the client so that they can continue with that policy, and it doesn't go, it doesn't lapse, right? Or they don't lose the coverage. Different things like that could potentially happen to a family if it's not planned and put in place properly. So I'm going to share, let me go back here and share my screen and pull up a case study. And I'll do if anyone has any questions too, right before we wrap here with Nationwide, I want to, if anyone has any questions too, we can go over that. All right, so if everyone can see my screen here. This is so I just a quick few notes here that you can see. Put this together from a family that we recently helped. And when you look at this family that we helped, this is a 47-year-old female, good health, and she currently had you can see that there. She currently had a policy that was had an $800,000 just a term policy expiring in 17 years. She's paying about $113 a month, and that was her term policy, 800,000, a $200,000 whole life policy, paying $162 a month. They had about $1 million total death benefit for the wife, and a $275 total monthly premium. Now, here's a family that we helped that she's a financial analyst. She does pretty well. She makes a six-figure income, and the $1 million was good to protect what she needed. We went through her dime. We went over what her situation is currently. She felt pretty good with that. They have other assets that help them be more. When you look at that X curve, right? They're self-insured for a lot of things as well. Not a lot of debt. The mortgage is under control, almost paid off. So they feel like they're in a pretty good situation. So for her, the 10 times her income was a pretty good situation. They've got college plans in place that we took care of and are doing. And, the $1 million protection, she felt good about. That's what she had. But she wanted to do, when we first visited, we did a discovery of what was going on with their life insurance and see what's out there. And she wanted to make sure she had enough coverage and the right coverage. And this is what she was paying. Now, when you look at what we did is, as we reviewed this, we saw her term policy was expiring in 17 years and a $200,000 whole life. So as we went over some of the information we talked about, one of her concerns is exactly what we just talked about, is long-term care. She said, I feel good about my assets. I feel good, what we're saving, what we're doing for the family. But is this whole life policy really going to be enough? The term when it expires. She understood having insurance for a long term. She liked the permanent policy as well. But her biggest fear was the long-term care. And she thought about that, and she said, what if something happens? What if she gets sick? And unfortunately, her husband has had some medical issues as well. So when we looked at it, what we were able to do, go back to that. What we were able to do for her is put her in a situation where we got her a $400,000 permanent nationwide policy with long-term care. She had $28,000 of a 1035, which was cash value from the whole life that we were able to move over. Now, again, her medical history has not changed, right? So she had this whole life policy from before, but her financial situation, her medical history, I should say, has not changed, where she was still, we got her underwritten first before we did anything with other policies, and kept her coverage in place and everything, of course. And we were able to get her one of the best rate classes with nationwide with long-term care, able to move over that $28,000 and have her policy premium about $210 a month to age 101. And that's illustrated, again, that's not guaranteed on there, but we know there's the guarantees in the index universal life policies, but this is illustrated about a 5.28%. Again, I'm not going to get too much into the weeds on that in the illustration, but that's a hypothetical illustration. But she felt pretty good just at that amount. But now that $210 a month is not just what she's paying. So again, I'm not going to get too much into it, but she has the opportunity to put more money in there, which she's going to be doing. She's going to be lump summing actually several thousands of dollars per year already right off the bat, besides the 1035, because she sees the value of saving more so that she has an extra nest egg that has tax advantages for supplemental retirement income. That'll push her policy potentially even out longer. But even at the $210 a month at that rate, we got her policy going to age 101, which she felt comfortable with. But again, she's going to fund even more monthly. That was just the base monthly premium. And then we also added, now that was $400,000, so we doubled her permanent insurance. But then we were also able to give her a $600,000 Transamerica 20-year term that just got approved as well with living benefits. So now that chronic illness and critical illness that we talked about with the LB, some of you are familiar with, we were able to give her that. So now she just she went from no long-term care or critical or chronic illness benefits to $1 million potentially, right, of coverage where she could get the 2% per month, right, for the nationwide, which is $8,000 a month. And then she has the critical and chronic illness with the Transamerica LB at $56 a month for 20 years. So we extended her term by 3 years, and her premium is even less than what she started with, from $275 to $266. Again, she's going to be putting more into that nationwide policy just with the added benefit features. But even if she didn't, we still put her in a better situation, doubled her permanent policy, and got her those living benefits. So that's was the case study here I wanted to share. And again, there's more that goes into that. There's some other great studies out there and great cases. I know we've shared a lot, even from some of our trainers on this call, and a lot of great things that we do for families when it comes to crop protection. And we're really proud of what we do when it comes to insurance. Last thing I want to share here too is I'm going to go and pull up this. All right. So you guys can see that. I am your life insurance policy. This is something that we give to all of our clients on delivery. Now with COVID, things have been a little different with our deliveries electronically and that, but still something I share with my clients and send it to them. And I think it's important to really understand when you look at what life insurance does and how important it is. And if you just read that yourself, it always cracks me up, not in a laughing way, but emotionally, it always kind of cracks me up when I read that, because it's just true what we do for families. And when you look at any type of insurance that we put in place, and any type of plan, this is the foundation, this is the basis. And I went through a lot of this kind of quickly. We don't have time to get into too much, but I hope that made a lot of sense. And I hope you're able to take a few nuggets of wisdom with you and just on the time that we had just to share a little bit about it. But, I think, again, I just want to reiterate that one of the things we talk to all our clients about is no matter what, if they have to look at these things, is if they could die too soon, they could live too long, they could become insurable, and cost should not be an issue. Those are 4 takeaways that I always look at with life insurance, is that if somebody can understand that, as long as my client and the people or families that we're helping understand those 4 things, if they could really understand those things and really have it go to their heart, really be educated on that and how that works for their family specifically, I think they can make the right decisions and have the right education to make the right decisions for the right solutions for their family and understand what's best and what's needed.